Hello dear traders and investors, I'm glad to present to you the daily market review prepared by experts from fx.co portal. Here we go. Today is the 19th of January and we started from the GBP USD pair with Jakub Novak. But first, let's have a look on yesterday's transactions for pound sterling dollar pair on 5-minute chart. The test of 1.2306 happened when the MACD line was already far from zero, so the upside potential was limited. Some time later, there was another test at 1.2374, but this time the market signal was to sell, which resulted in a price decrease of about 20 pips. Pound continued to rise on Wednesday as the inflation data in the UK fell slightly. The sharp drop in US retail sales also triggered a very strong rally during the US session. No important statistics are scheduled to be realized today, aside from the house price balance from RICS and credit conditions in the UK. This means that sellers have a chance to trigger a correction, especially since in the afternoon the US will release data on issue building permits and number of new foundations. A rise in the figures will certainly strengthen dollar demand, which will lead to another downward trend in GDP USD. A surge in initial jobless claims, on the other hand, will hurt dollar. For long positions, you can buy pound when the quote reaches 1.2365 and take profit at the price of 1.2426. Growth could occur if the upcoming US data is very weak. However, make sure that when buying, the MACD line is above zero or is starting to rise from it. Pound can also be bought at 1.2327, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.2365 and 1.2426. For short positions, you can sell pound when the quote reaches 1.2327 and take profit at the price of 1.2267. Pressure will increase if there is no bullish activity at the new highs. However, make sure that when selling, the MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.2365, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.2327 and 1.2267. We've got a red-hot trading plan for gold from Dimitrios Tapets. Let's have a look. Yesterday in the American session, gold reached a maximum of 1925.79. This area has become a barrier to gold, as it failed to consolidate above. Currently, we can see that gold has stopped around the psychological level of 1900. The metal is currently trading at around 1901. This level coincides with weekly and monthly support, and a technical bounce is likely if gold settles above this area. In case gold trades above the key level of 1900, it's likely that there will be a technical bounce towards the 21 SMA located at 1911, or it could even reach the top of the downward trend channel around 1920. On the contrary, in case gold falls and consolidates below 1900 or a max pullback towards 1912, we could expect a continuation of the bearish movement, and it could reach 88 Muri, located at 1875. The Eagle indicator is moving away from the 90-point zone, so gold could resume its bullish cycle, but if it falls to break above 1925, it will only be an opportunity to sell. Our trading plan for the next few hours is to sell below the 21 SMA 1912, or if gold breaks the psychological level of 1900, to sell with targets at 1875, 8A Muri level. The next in line is Laurie Bailey with AUD USD forecast. The Australian dollar is taking the lead after markets collapsed yesterday due to disappointing US retail sales report. December sales were down 1.1%. And a divergence with the Marlin oscillator has formed on the Aussie's daily chart. The price has already crossed the support level of 0.6917, and the signal line of the Marlin oscillator is about to move into negative territory. The nearest target is 0.6800. In case the price crosses 0.6730 and the MACD line, the decline will develop in the medium term. On the 4-hour chart, the price settled under the MACD line, blue line on graphic. Marlin oscillator forcefully penetrated into the territory of the downtrend. The Aussies in a downtrend now. That's all for today. See you next time. Good luck.